Oh boy, I cannot wait to get my first ever stock in the stock market. It'll be one of the best purchases I've ever made. I wonder which stock I should get first. Oh my goodness, I know. I should get a Tesla stock. Wow, look at that. It looks like it's about to increase. I should buy it now, so I could get some of the profit too. Ladies and gentlemen, you have just witnessed moments before disaster. Why disaster, you might say? Well, my buddy Paul has just bought a stock without knowing what he is doing. He thought just because the stock was rising up in price, it will give him a profit. It is really devastating to know that this is some of the people's logic when they go into the stock market. It is also just one of the many mistakes a beginner day trader or maybe even any day traders make. However, ladies and gentlemen, I have the cure. Before we head into the video, please subscribe if you want to see more future content on day trading. It only takes a second out of your day, and with that being put into place, now let's get to the video. Everyone makes mistakes in the stock market, but if you make them constantly, then you need to find out what is going wrong with your tactics. Don't worry though, I have made mistakes too. Like I have said before in the past, mistakes are common in the market. What you should know is you gotta learn from your mistakes. If you keep on making those mistakes, you're just gonna lose money. There's nothing past that. You're gonna lose money. If you don't know what your mistakes are, then you should be listening to this video. Really, you should, because I'm going to explain to you 7 common mistakes day traders make in the stock market. And if you do listen to the video and watch it, maybe you'll find your answer, maybe you won't. I'm just putting up these 7 common answers from other day traders that I have read from. But anyways, enough talk. Let's go straight to our number 1, which is going to be going into the stock market unprepared. When I say you're going into the stock market unprepared, I usually mean like you don't know what you're doing at all. You have no experience, you are literally just I don't even know, you're just there staring at a stock, just waiting for something to happen because you have no skills or anything. Yeah. So that's a major part on why people fail at stocks, because they don't know what they're doing. Really, the cure for that is just watch YouTube videos. Like honestly, it's really that simple. Just watch a YouTube video on how to do stocks, aka my video. No, just kidding. You can watch any video. They'll explain it better than I did in my video. And yeah. I mean, learning the basics, it's easy, but like doing it is actually really difficult. And yeah, pretty much. Just don't go in unprepared. Watch some YouTube videos. Just make yourself smarter. Don't be a dum dum. Be a smart. Anyways, on to number 2, which is lack of right tools. Lack of right tools, like hardware tools? Matt, what does this mean? Well, first of all, no. Second of all, the tool you really need is TradingView. Once you have TradingView, your life is simple and complete. As here, TradingView, let's say, I want to see Apple stock because I like Apple. I have an iPhone. Pretty much I have an iPhone. I like Apple. Anyways, go to full featured chart. And voila, this is the tool to make you successful and not make any mistakes because you have the proper tools, not a lack of tools. And I guess going deeper into what tools you need, well, you need obviously TradingView. And once you get TradingView, which is you just make an account, it's free by the way, you go into any stock with that full featured chart, you turn on MACD, right? I believe it is. Go here, type in MACD. It is going to be this one. Do not choose that one. It'll screw up your stuff. MACD. And also type in RSI. And it's going to be Relative Strength Index, aka RSI. Don't choose any of these. I don't know what they are. And then also, this one will mess up your thing. Whatever. Anyways, that's pretty much it. These are the right tools. You'll get constant ads like this, but you could just click out, and then you can click out of that, and then it's simple. MACD, RSI, stock line, voila. And now we are going to move on to number 3. Not taking out stocks after a loss. When I say not taking out a stock after a loss, I'd say you were a dum-dum and you bought a stock right here, 755, and you're just thinking it's going up, I'm gonna make some profit, and then it goes down and now you're at 733. What people do is they don't take their stock out. Well, here it doesn't really show an example of what I mean, but still, let's say, I guess a better example is here. You buy at 752 and you think, well, it's gonna go up because I said so, and then it goes down, and then you realize, oh my goodness, I lost money. You know what, I'm gonna keep it because it's gonna go up, right? Nope, it goes down again. It did go up here, but it did go down, and then it did go up, and then you got lucky and you got this crap right here. Anyways, the point is, you need to sell when you lose big, or else you're gonna lose even more. Trust me, I've done it before, and I've thrown some things because of it. But do not be me. Sell when you lose money, especially when it's a big stock, because you'll just lose a buttload of money, and that's not the way to go down. So take out your stock after you lose money. Pretty much that. Anyways, going on to number 4. Buying more stocks after a loss. Yes, people really do this. They buy stocks when they lose money. I don't know why, but that's not a problem I had. I guess people just do it. I really don't know. But from what I've searched up, people do it because, this price is going down and I'm losing profit. Maybe if I buy a stock right now, again from the same company, I'll get a profit because it's down low from the price. I don't know. I'm not making sense there. But anyways, the point is, you buy a stock, say right here, you buy it here, 752, and then it goes down, you have 743, and you think, oh, I'll buy a stock here because maybe it'll go back to 752. Nope, it goes back to 738, which makes you lose even more money, which is bad. Do not do that. That's just bad. Like, yeah, it's bad. Don't do it. It's horrible. It's just a way to lose all your money. It's like gambling. You're basically going to lose no matter what, unless you're a genius or something. But you're not a genius. That's why you're watching my videos. Because you're not a genius. I'm not a genius either. Anyways, on to number 5. Going all in. For the love of God, do not go all in. I don't know what kind of crazy person you might be, unless, like I've said before, if you're a genius and you know what you're doing, but just don't go all in. That's a horrible idea. It's basically putting all your eggs in one basket. It's not a good idea, because if you're over here putting your eggs all in one basket and getting a $755 stock, and then it goes down the crap and now you're at here. Imagine, okay, $22. That may not be a lot, but if you have 10 stocks, that's $220 you're missing right there. $220. Bro, you could be like richer. Like you could have like the money you had at the beginning, but now you're missing $220. Just don't do that. Be smart with your money. Don't go all in. Maybe choose one stock or do penny stocks. Actually, penny stocks are actually worse because if you buy like, well, let's start here. Since they're less expensive, you can buy more. So, see, if I have $800, I can only buy one. So, if it were here 756 and it goes down, I lose $5. But if I have $800 for a like dollar penny stock, you could buy 800 stocks. So if it goes down a cent, you're losing a lot of money. You're losing more than $5. You're losing so much I can't even calculate because my brain isn't that advanced like other people. But yeah, don't don't go all in, please. Anyways, going in at number 6, compulsive trading. Matt, what does compulsive trading mean? It's too much of a big word for me to understand. It's okay. I'm not good at English either, even though I've spoken it for like, I don't even know. I don't know. Anyways, compulsive trading is basically you look at a stock like, oh my goodness, it is going up and it's at 756. I'm going to buy Tesla. Immediately, you just, right there, you buy it, you lose money, you gain maybe money back. So maybe you buy more and then you lose money because of this drop. Compulsive trading is basically just, you cannot resist. Yes, that's the word for it. You can't resist. You just buy. You can't resist. You're just buying away. That does lead to other mistakes, but really, compulsive trading is just its mistake itself. And I've done it before. Maybe you do it, I don't know, somewhere else. Maybe you, I don't know. I've done it before. It's a common mistake. I know it's hard to resist, but like I've said before, you go here. If you see the RSI is right here, don't buy. Please don't buy. It's got to be down, like over here, across the line. You can buy now. So yeah, you'll probably make a profit soon if you bought there. Anyways, just don't buy. Don't be compulsive and buy. Just talking about it stresses me. Just please don't do it. I beg you. Anyways, going to the final and last common mistake, number 7, predicting by looking at the news. Predicting by looking at the news? Matt, what does that even mean? Well, it's literally what it seems. You go here, headlines for Apple. How do I scroll? Okay, right here. Do that thing, you scroll down, you're looking at the news. Nightmare for global tech. Coronavirus fallout just beginning. Okay, maybe that gives you an idea of like, okay, maybe the stock market might go down because of this coronavirus. So, you just buy because you're predicting that it's going to go down. Don't do that. You need to look at RSI. Everything relies on RSI. That's basically it. RSI is your best friend. MACD is just a helper, I guess, to see how high it goes. I don't know. I don't really know MACD that much. But I just know RSI is your helper. You and RSI are married together in stocks. So if you're going by the news on what you should buy and what you shouldn't buy, you just stop stocks. No, I'm just kidding. All you have to do is just stop looking at the news. But people do this. They look at the news and they say, oh, I'll go buy a stock right now. When maybe they're buying it like right here. Oh, just because 3 hours ago. 3 hours ago, it literally was like right here. Because for today, it's Sunday for me. But yeah, right here. They'd be buying right here. And that thing will probably go up a bit and then boom, they lose money. Simple as that. Don't do that. You're smarter than that. Be a smart person in stocks. I believe in you. There are many mistakes that can be made in day trading for the stock market, but these are the most common according to day traders. Mistakes are common. Don't be afraid to make them. The problem that I have is do not make the same mistakes over and over. It'll ruin you. It will destroy you. It will prevent you from making a profit. I'm fine with you making just one mistake, but if you keep on making the same mistake over and over and over, that's a problem, and you need to fix it. Anyways, alright, future investors, that was the 7 common mistakes day traders can make in the stock market. I hope this video will help you rethink when you purchase a stock and make sure you are 100% sure you will profit from it. I hope you all enjoyed the video, and if you did, leave a like and subscribe for future content. If you have any questions, leave a comment below and I will be answering them. Alright, I will see you all in the next video. I translated this on Google. I don't know if it's correct, but I think it's French. I don't remember what I translated, but yeah, I'm not even gonna say that. Goodbye. It's supposed to be goodbye in French, but yeah. All right, see you guys later. Adios.